Hello YouTube, it's Bob Loukas again on Friday, April 26th. I hope you're all doing really well. This is a follow-up video from the previous videos I've covered on Bitcoin and the 4-year cycle. I know the last video obtained a lot of attention, a lot of views, up to around about 100,000 views already. So thank you very much for sharing that. If you haven't shared it, please do so because it is the cornerstone of the 4-year journey. That video does cover the entire expectation for the coming bull market, the accumulation phase followed by the awareness and the retail phase of the next Bitcoin 4-year cycle, and it will be referenced continuously in all the subsequent videos and the future website that's coming soon. Everything will point back to that 4-year cycle. That 4-year cycle video will be referenced frequently. So it's important that you share that for me and help spread the word. In addition, if you're watching this video today and have not seen the 4-year cycle video, stop the video right now. It's not going to help. Go back and watch that 4-year cycle video that's posted here on YouTube, and soon will be posted on the new website, which is the 4-year journey. That's the logo I have up on the screen right now. The 4-year journey, a Bitcoin HODL story. The purpose of the 4-year journey HODL strategy is not simply to buy and hold, although that is a big part of it. It's going to be about learning how to hold a significant position when the gains get serious. And when you're in a very profitable position, how to manage that position, how to manage your psychology, how to manage your emotions, how to manage the FOMO that's going to be going on around you. That's going to be a very important aspect to holding and maintaining those gains. Far too many people get into a good position, into a long-term investment, but end up selling out far too early. I mean, in the very early stages, purely because the gains are just too much to handle. And that's a good problem to have, but it does require a lot of strategy in dealing with that. So that's going to be a big part of the 4-year journey. And of course, more importantly, is once you get to the point where we feel the 4-year cycle is in danger of topping out, we would then provide strategies on how to begin to scale out, how to begin to exit, and how to begin to maximize the hold that you did for many years, we hope, at that point, and get out on top with as much of the gain as possible without giving a lot of it back, of course. That's going to be a huge part of this going forward. So what's this video going to be about? So the first video was, what is the opportunity? Okay, so the 4-year cycle videos that I published earlier present the opportunity ahead. So it's the investment thesis for getting into Bitcoin, for holding significant amount of coin, and what that opportunity looks like going forward. That was kind of the first foundational piece for this series. This video is going to be a little more technical and focus more on the position itself and the allocation that I believe one should consider. I'm not going to tell you what to do, but what type of position I think you need to maximize your returns over the coming years. I'm also in this video going to allocate, and I think many of you know this from previous videos and comments I've made. I'm going to allocate 25 BTC that I have into a new public address that is going to simulate a $100,000 US portfolio. And I'm going to price these at a $4,000 price, hypothetically, just for the investment, for the portfolio's perspective, to simulate that $100,000 investment. 25 BTC at $4,000 equals 100,000. The goal there is not to say that you should put in 100,000. The goal is to basically say that for every $100,000 allocation that you put in to this strategy, this is how you want to trade and invest over the coming months and years. So there will be points where we want to take some profit, take our investment out, for example. One of those, I believe, is going to be around about the $15,000 level, where we'll be taking some off the table, for example. And I will use that model portfolio, which is actually real Bitcoin, of course, as a guide for and more transparency to show you what I'm doing personally with some of my Bitcoin. Now, I have a trading account that I trade with, and I trade that on the daily charts. But this allocation is only for the smart HODL story that we're presenting here as part of the 4-year cycle. That if you have less to invest, that's fine. You take a percentage of it. If you have 10,000 or the equivalent of 10,000 to invest, if that's the right number for you, then you will just reduce that by the 90% or whatever it is, right? So you're gonna allocate 10% of that. So you'll use a 2.5 BTC allocation, and then you will, if you want to, of course, follow the same strategy, you will then just proportionally buy and sell along the way, based on that allocation level. Now, and if your right allocation is $1 million, for example, then you will do 10 times the amount, and you will again do the same thing. You'll just use 10 times the amount that I do personally. All right, so before we get too deep into the actual allocation and the Bitcoin move, let's talk briefly about the overall allocation, what the right allocation might be for you. The disclaimer, of course, is that none of this is intended to be financial advice. This is educational in nature, and I'm actually just outlining what I'm doing personally. How you choose to interpret that information is purely up to you, but I'm just giving you kind of my background and my experience and how I'm going to approach this going forward, and I'm going to try and do it in a more of a transparent manner, of course. Okay, so that's the that's kind of the disclaimer that I want everybody to be aware of. The other thing is, before I get too deep into this, I'm not going to be able to eclipse the previous 4-year cycle videos in terms of how excited you're going to get over these videos. The last video I did was full of hopium in many ways, and full of it was full of opportunity that people can see as being obtainable. And I know people watched that and got really excited. My intention wasn't to, it wasn't a motivational video in that sense. It wasn't designed to get you all sort of really emotional and excited about it. We want to be excited about an investment opportunity, but we want to be rational. And here's where I think I will lose many of you with this video, because this video is an actionable video. It requires you to now begin to take action on your own behalf and put some of this into practice. The previous video allowed you to sit back and get really emotional about the opportunity, but this one requires that action that I'm sure many of you will not be able to follow through with. It's almost like watching those motivational videos on getting fit, lean, and healthy. They're easy to watch, and they're actually nice to watch. They give you that kind of adrenaline rush, and you can kind of like taste it for a brief second there. But then once the video ends and you go back to your life, it's very hard to make those lifestyle changes that you need in terms of getting to the gym, in terms of working out, in terms of eating the right foods, for example, to obtain those results. So those motivational videos are a very sort of short-term impact. And in some ways, that 4-year cycle video was similar. It provides the motivation and outlines the opportunity, but how you choose now to begin and to execute is really what's going to be important. So this the same applies to investing. It requires focus, it requires a plan, it requires a strategy, and most of all, it's going to require a lot of discipline, patience, and it's going to require you to do the execution portion of that strategy. So the first point we're going to cover here is the actual allocation amount. How much should you buy? How much am I buying, for example? And what's the thought process behind that? So simply, we want a position in Bitcoin to take advantage of the 4-year cycle opportunity, to be able to walk away with it significantly financially free, right? But we don't want to approach it with a sense that we're going to get filthy rich. If you start thinking filthy rich, you're actually probably going to end up not making any money, to be honest with you, and potentially even losing money. And that's because it's just difficult to be significantly over leveraged or over positioned to one opportunity and safely and easily ride the ebb and flow nature of a speculative and volatile asset like Bitcoin. It's best to have a reasonable position, a reasonably sized position that you will be able to sleep comfortably at night, not waking up at 4 in the morning to check the price of Bitcoin, or when Bitcoin has a really bad week, for example, that you are emotionally distressed by it purely because of the amount of leverage and the size of the position that you have is just far too proportionally big for your overall wealth situation in your current lifestyle. So for me personally, the allocation that I want is a maximum of 10% of kind of liquid assets that I hold. It's actually closer to 5% than it is 10%. I don't want to be allocating any more than that to this type of strategy. I'm not a believer in the sense that Bitcoin is going to replace every other government-issued currency. I'm not a believer that Bitcoin will be kind of the world's reserve currency. I do believe it will hold a significant store of value, probably more than the value of all gold, for example, of $8 trillion. I think it's going to have a significant place within the world financial system, but I don't see it going much more beyond that for reasons sort of beyond this video, right? The time we have allocated. So for me, I still want to own businesses, and I still want to own real estate. I definitely own stocks, and I definitely want to own gold, and I definitely want to own other assets and other income-producing assets. And this, for me, is just one component of my overall investing and wealth strategy. Okay, so having an allocation of more than 10%, in my opinion, even though the opportunity is so great, is I wouldn't call it reckless, but it's unnecessary. And certainly if it goes beyond 20%, I would call that reckless. And if you're borrowing funds or trying to get as much exposure as you can to Bitcoin, because you see price, like I do, potentially getting up to that the 6-figure and beyond area, then going back to what I said earlier, it's going to be very difficult to hold that position, because the amount of stress it's going to create, it's going to cloud your judgment, and it's going to make it very easy for you to lose that position at some point along that journey. So for me, 5%, 7% is a good enough allocation. I also have an allocation on the trading side at double that size as well. So there's allocation there. And obviously I have, with videos and different websites, exposure to crypto itself. So point is that when you're looking at something with such a huge asymmetrical opportunity, so meaning that for every 1 unit of risk that you put in, we're looking at an opportunity of say 30, 40, 50x, then that alone tells you that you don't need to risk a whole lot. Why risk 20 to 30%, 40% of what you've worked so hard for, where the opportunity is 20, 30, 40, and 50x? There's no sense, there's no point in doing that. Even with a 10% allocation, if we can realize the goal of this journey, then we're talking about being 300%, 400% up overall on your disposable wealth and income. So that's the perspective I think we need to take into this when looking at such an enormous possibility that lies ahead. Take a more sustainable allocation to this that allows you to see this as just one component of an overall strategy. And but at the same time, right, what's going to be very important is that we have to realize realize that reward if it gets up that high. So you don't want to be like almost everybody else who doesn't have a strategy. They're going to get in here, they're going to call themselves a hodler, right? And they're going to buy, but they're going to get out at 7,000, they're going to get out at 9,000 or 12,000 or 18. If you're going to do this, right, reduce your allocation to a very manageable size so we can get to the point where if Bitcoin hits 50 and 60,000 and 100,000 and 150,000, that we have the exposure where nobody else or very few are going to be able to have that exposure. So that's the trade-off, and that's the reason why we want a manageable allocation, because we want to be able to, when prices at that point, we want to be able to say, yeah, this is what we planned for. This was at least the goal. It wasn't the prediction, it was just the goal, and we're here now, and we have a plan, and we're going to execute to that plan all the way to the end. And that's going to be, I think, the overall and overarching theme and message from this website and this journey that we're going to take is that if we do realize that cycle the way it was outlined in the previous video, then we will we will profit from that. And along the way, we will have risk mitigation built into this. And the first risk mitigation piece starts with the allocation. When you make that allocation and you go on this journey, you are immediately risking 5 to 10%, whatever that number is, of that wealth into this sort of strategy. So you immediately have that at risk. But if that's the overall defined risk, then that, at least for me, is manageable and something I'm willing to take on. So you have to be, one, willing to say, I'm going to potentially lose my initial 5% or 10% allocation to this. And that's the price I pay to see if Bitcoin will or could, get itself up to that level that we have outlined in the previous videos. That's the risk we take. Now, again, like I said, along the way, we will start to, if Bitcoin succeeds, even partially getting to even previous highs, I will show you a way, at least I will, take back a lot of my initial risk by taking some off the table and minimizing that risk to the point where we'll be playing with, so to speak, the house's money, and we will be in a very strong position if it gets up back to all-time highs and beyond. Very strong position because we will have taken back our investment and banked it, and we'll be sitting there with only profitable positions. And the reason we want to get to that point is it makes holding through massive gains much easier to do. So the $100,000 25 BTC position that I have is not my full HODL position, but it's actually not too far away from it, to be honest with you. So for me, it's going to be meaningful. It does represent exactly how I'm going to trade this over the next 2 or 3 years. So I wanted it to be meaningful. I wanted it to be significant. I will in a minute open up the Trezor here live on this recording and make that move and publish the public addresses. I know there's a security, privacy type of concern there. It's fine with me. None of my coins are sort of black market coins. I bought these on exchanges. They are tied to my name, and I do intend to pay my taxes when I sell, so I don't have any issue with that. And a lot of my coins are very hard to trace back to other sort of investments, so I'm okay with that. I'll publish the public address so you can just track it. You can see, if I bail out, then you'll know that my 4-year journey is not what it was or what I said it was going to be. So I feel that adds a little bit of, I wouldn't call it legitimacy, but I think it adds more realism to the journey that we want to take over the next 3 to 4 years. So I'm not encouraging you to post your BTC public addresses, but if you want to, it might be fun in the comments as well to publish your allocation to this, or at least a portion of it, whatever you choose to do. And we can ride along and let's see how we go over the years, and we can look back at that. But in the future, when we get to stage one or allocation or step one, where we're going to take some off the table, I will be taking it out of that BTC allocation of 25 and showing the over time the sales that we make as part of that strategy. All right, so onto my Trezor. I took created a new address. This is the address here. We have 0 BTC obviously in this account. So now I'm going to go over to my Trezor and I'm going to send the 25 BTC to this address, and this address will be the tracking address for the remainder of the 4-year cycle. Okay, so I just sent from the Trezor to this address. Let me do a refresh on this page. All right, so there it is. One transaction, unconfirmed, 25.05 BTC. All right. So now we have our tracking address, or at least my tracking address for this journey. This represents my $100,000 allocation, although it's worth more than that now, of course. But the reason why I said 4,000 and didn't use less BTC was because the first video I published, I think Bitcoin was around $4,600, and then the second video, and this may be the other way around, but one video was at 4,700, the other video was at 3,600. So around about, an average of around about $4,000, $4,200 is kind of when I've been calling people to make their allocation, get their position that they need. So I'm just modeling this off of that. In the end, I don't think it's going to make a huge amount of difference, especially when we're talking about the type of money or the type of price that I'm looking for BTC in the future. So I get the question a lot, hey, you've been talking about this big retrace back to the December lows or a big shakeout and things like that. So why should I buy now? Why should I buy my 5% or 10% allocation today if I don't have it, when you expect Bitcoin to go back down? And that's a good question. I mean, it makes sense to some extent, right? If I'm talking about a $2,000 drop in Bitcoin at 30 or 40% drop, why the hell would you want to get in now? Well, the answer is kind of simple. It is that, one, the opportunity here is for a 40x move. So you don't want to be playing around with the entry when really this is all about the holding and the smart holding and being able to hold through the larger numbers that we plan to see in the future. It's all going to become irrelevant if Bitcoin gets to 150,000 and you haven't gotten that position yet, right? There's a chance, and Bitcoin's a crazy volatile asset that has a huge following. There's a chance that from this level today, I'm going to flip to a chart, and here's the weekly, right? There's a chance now that Bitcoin goes higher and does not necessarily even come back into this area. It's not what I expect at the moment, but there's a chance. And if you don't have that allocation and something like that plays out, you're not going to be able to get in. And if you do get in, it's not going to be with the right allocation. You're going to be pretty upset that it's already doubled or more in price. And I'm telling you, you're not going to be able to get on board with a strategy like this. So if Bitcoin does something like this and gets to, say, 7,500, but then retraces back down, to no more than sort of 6,000, and then sort of spends a lot of the time on the bottom there before going higher, you're going to find it very hard to get any type of allocation based on this, because you're looking and your eye is focused on this 3,000, even 2,000 area, and 4,000 for one more time. I mean, there comes a point where there just isn't another one more time down, right? Now, if you need to, you could take a position now and then also add a little extra more if it does, or when it does get down into that $3,000 range. I do think, because I've been through so many bear market bottoms in the past, I do think we end up seeing at some point soon, either with the May 60-day cycle low is due, some type of decline down, all right? Or even further to that, one more in August, which is the next 60-day cycle after that, kind of down into this sort of 3,600, 3,500 area, which would be a huge shakeout, maybe even go further down. You just don't know. It's not about short-term price prediction. It's more about letting you know what the possibilities are. And if this would occur, we want to be prepared for that as well. We want to be ready for it. But you don't want to be waiting on the allocation for something like this. You want to maybe add to it a little bit, get a little more exposure if you need to, knowing that we're now well and truly past the 4-year cycle low, and then it can come up from there. Like I said in the 4-year cycle video, that's more like the trajectory I outlined in the 4-year cycle video. But it's regardless, right? This is still a good price. This is below all the clusters that we saw in 2018. It is still 75% or so below the peak. It's a good entry, guys. It's a good place to get your position and be content with it. And if it gets $1,000 lower or $2,000, like it's possible, then it's fine. That's just part of the process. At some point, as part of this strategy, if it unfolds, we're going to be well above that, and your position will be well in the black. So all I can say is get your position, hold the position, and just look longer term when it comes to the price movement. Never look at Bitcoin from a daily chart perspective. Ignore the news like we had yesterday, for example, with the Tether news. Ignore that news. That's all noise for a long-term holder. Look, it's just one little candle. Here it is here. That's the news right there. In the grand scheme of things, when you zoom out, what do you see? All right, you see so many you see Mt. Gox all the way back, many, many years ago. You see other scares, and you see other hacks, and for example, you see other bear markets. It's all part of the process. It's all noise. If you get caught up in that noise, you're going to lose your position, or you're never going to get your position, and you're going to miss the focus on the long-term goal, which is up here. Okay, as was outlined in the 4-year cycle. That's the goal. That's the plan. As I said before, eye on the prize. Get your position now and get it in BTC. I get asked a lot, should my position be, a bunch of altcoins or a bunch of different coins? Well, yeah, you can have some, right? But this strategy is going to be about BTC. And why? I'll tell you very simply why. It's been 10 years, a little more than 10 years since Satoshi came out with the first true sort of tradable cryptocurrency, Bitcoin. And in 10 straight years, we've seen probably 5,000 now. I'm just guessing. I know it's many thousands because there's already a couple thousand on the market cap website. But there's probably been around 5,000 different tradable coins that have come out in the 10 years. There's been around about 15 or 20 clones or forks of Bitcoin itself. There's been other supposedly Bitcoin crushing technologies that have come out and come and gone. But think about this for a second. In 10 straight years, there's one asset that still commands more than 50% of the total market cap, has never once been unseated from the #1 market cap position, okay, has by far the absolute most hashing power behind it, and is the only real asset that smart money institutions and wealth managers care to be involved in. And it has the network and it has the brand. So why, when we're looking at a 40x, 50x opportunity like this with Bitcoin's history, why the hell do we want to mess with anything else? People get greedy and they think, well, Ethereum did, 200x or even 1000x. Yeah, it did. So what? Okay, and it's down 92% as well since then. It doesn't matter. Go with what has the highest by far probability of being being achievable, and in this case, that probability is Bitcoin. That probability is Bitcoin over the next 4-year cycle, getting up and doing another 10 or 20x from the all-time highs as it has in previous cycles. That's the opportunity that I want to focus on and solely on, and not be sidetracked with the allure of massive gains from other altcoins that could end up easily being unseated by others. Ethereum could easily be unseated by EOS or NEO or ADA or any other one of these sort of distributed apps, platforms, smart contract platforms that are out there. There's so many of them, and it's a matter of what's the next flavor of the month. Ethereum's not guaranteed to be it. Privacy coins like Monero and Zcash, I mean, they could be easily unseated by Bitcoin privacy that's coming. There's a whole host of reasons why any one of these other ones will or could simply just fall off that top 10 list and never come back. You don't want to be in that. This is about minimizing the risk, focusing on what the potential is, and then executing with with a lot of focus, right, on a strategy and a plan to come out of this at the end with 100% looking back, saying, yeah, 3 years ago in April of 2019, I put in my allocation and I was going to take X amount out of 15. I was going to take X amount out of 50. I was going to take X amount out of 100. And I did. It came true and I executed because the plan was reasonable and manageable. Okay, I know I'm kind of being a little repetitive here. And I do that on purpose because I think people need to just slim down the expectations, be hyper-focused, and see the vision, and then make sure they execute towards it, and then, of course, mitigate risk. Okay? And here's another thought. Back in 2014, I really liked what I was seeing in Bitcoin, but it was in the crashing stage. It was in halfway through the bear market or more. It was crashing through $400 from sort of $1,300 on the way down. I didn't want to buy because I wanted to see the $100 level. This was a tweet that I replied to somebody I was following on August 24th. It went down to 150 and I still didn't buy. It was down 90-something%, I believe, 92 if I'm not mistaken. And I never bought. And I never bought until I got back up, I think it was like a year later, towards the end of the following year, it's something like $850 or $900, 10 times higher, or from the 150 bottom, around 6 times higher. That's just huge and getting close to new all-time highs. That would be the equivalent of around about $15,000 today, getting back 3/4 of the way back up before getting back in. So that's the risk you run by waiting too much. And look at this, from the $300 level where I could have bought at, it went to 20,000. I eventually did buy, and I eventually got out quite a bit out from around 10 to 20,000. Point is, though, that that never seems like the best time to buy, and sometimes it's not the best time. It doesn't end up being, in hindsight, the best time, but in the future it was the best time because you got your position. And that's one thing I want to make clear, is that get your position is the right thing to do when you're an investor, when you have a long-term horizon. You're never going to be able to catch that very bottom. People like to think that they can, but trust me, even when a big capitulation comes, you're going to be too scared to enter at that point. It's going to reverse on you, and then you never get back in. Just buy your position, get comfortable with it, and get comfortable with whatever you are given and wherever price may go in the short term. Okay, so let's wrap this up. Okay, so these videos are going to come out probably every 3 weeks, maybe every 4 weeks, sometimes sooner, sometimes later. These are free, right? There are no expectations I have of you. You do your own research. I'm providing some of the research, I hope, for you. You're on your own after that. I'm here to help as much as possible. There's going to be a website coming out soon for the 4-year journey where this would be published, and also some more written text, and an opportunity for us to do more of a forum type discussion. So that should be out in maybe a week, maybe 2 weeks. I was hoping to have had it out by now, but it's not out. Again, as always, I'm not a YouTuber. I have no plan on being a YouTuber. I don't spend time polishing up these videos. I don't add graphic and sound and music and so forth. You're not going to get that from me. You're going to get just what experience I have, and in my best effort to present that experience to you in a meaningful way. If you don't like it, then I'm not trying to sell you or anything. You can move along very nicely. If you do like it, you're welcome to share the videos. You're welcome to share the website. You're welcome to share the story. The more people we can help here to take advantage of what I think is coming, I think the better off we'll all be. And I think we can always look back on it and smile, and maybe even one day get together and have a small celebration. So I hope you enjoyed this video today. It's a little more technical and a little more requires a little more action on your behalf. Like I said before, it's time to get out from the hopium. That's great to have a 50,000 foot plan. Now it's time to execute on the first step of that. That's the allocation. I hope it works for you. Thanks for listening, and I wish you all the best.